Hey, everybody. Welcome back. Welcome back. So, I am going to start doing something different, and it's my gift to you. But don't get too excited because it's only a short term gift. So, if you're not a member of my Floor Trader Stock Twits room, it's completely free. Head on over. 2,000 people already love what I do. At least I think they do. I don't know. Nobody really ever says anything, so I'm just guessing. But in any event, you'll see my comments on the market, what I think is going on, and some trades that I believe that are going to make me some money. In this room, I am not an investment advisor. I am just sharing my own personal trades. So please proceed with caution. Past performance does not equal future performance. But I do take these trades. These are live trades. I take them. And I won't share it unless I do take it. So, what am I going to be doing? Well, for a long time, I've been struggling with, what should I do in this floor trader room? Because the bottom line is I'm a very aggressive trader. I will day trade into a position and I will usually hold it for a week, month, sometimes even 2 months in some cases. So, because I'm so aggressive, many of the trades that I was sharing in this room, I don't think pretty much anybody could have followed them really. So what I've done is using all of my proprietary tools that I teach on my website. By the way, this is my website, Steve Patterson Trading. You can head it over there. That's me. What a handsome devil. And what a gorgeous VP of sales that I have right there is Carolyn. Say hello. She's very friendly. She'll chat with you anytime down here is my services. So what I teach on my website basically is what is about 30 years of combination of I want to say collaboration, but it's not really, of a combination of everything that I've learned in my career as a floor trader, as a prop trader, as an individual trader myself, and as you can see here by my testimonials, these are all real. These are all live. I can't make this stuff up. People love my course. Many times I am told over and over and over again it's the best decision they've ever made in their trading. But what I want to do is I want to help make people money because my course is obviously expensive. Not everybody can afford it. So what I want to do, and the whole purpose with this floor trader room, is to hopefully share my trades with you so that you can make some money. And if you make some money, then head on over and buy my course. That's the whole purpose, right? That's why I'm doing this for free. I am not a nice guy. Believe me, ask anybody at the poker table. I am a jerk. I can be an asshole. Just joking. I'm actually a really sweetheart inside. I can be salty on the outside, though. That's just because I'm old. But in any event, so what I'm going to be doing is I developed an algo specifically for this room. And this algo, I call it the 1 to 9 day algo. And so what this does is this will find you trades that are going to last anywhere from 1 to 9 days. And it's a combination of using the fundamentals, specifically around earnings, my proprietary order flow techniques, and identifying value and identifying key liquidity levels. Okay? Now, if you don't know what liquidity is and you don't understand the markets, it's because you're a numpty. And that's okay. There's nothing wrong with being a numpty. We were all numpties at one point in time, but I'm here to change that. One of the things you want to understand is markets move from areas of low liquidity to areas of high liquidity where they exhaust that high liquidity and then they seek out and move to the next level of high liquidity. So understanding A, what liquidity is, and B, its significance and importance as far as the auction process is critical. It's absolutely critical. Okay. And if you take my course, I will show you exactly how we go about doing that. But the key thing that you want to understand is markets are always in price discovery. That is what a market is. Its whole purpose for existence is to discover liquidity and build liquidity in some areas. So what this new methodology is, that this algo that I created, is it gives signals, okay? So I'm going to use Bank of America as an example here. So here's the last 2 years of signals. Now every time you see a blue arrow, that's a winning trade that at least made 50% or more on the option. In most cases, I look to make 100% on the option. Every time you see a yellow arrow, that's one where you could have broken even. Every time you see a magenta arrow, that's one where the trade would have lost up to 100% of the option or been stopped out. Okay, so what I'm going to do is I'm going to post a full 2 year of the algo signals, and you can easily just take a look at it and decide for yourself if this is something that you want to take or don't take. It's up to you. It's just I'm going to take it. I'm going to just post what the algo tells me to post. And I'll post the chart. You can quickly go through and go, oh, well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 winning trades, 1 break-even trade, and 2 losing trades. I think I like the algo's performance on BAC, and then you can adjust your risk accordingly. Now, I'm going to talk about risk in a second. Now, I want to warn you, not all stocks perform as well with this algo. So you can see here, Apple, for example, 1, 2, 3, 4. This is actually 2 break-even trades here. I don't know why they're blue, but these are 2 break-even trades. 5, 6 break-evens. 1, 2, 3, 4, 5. 6, 7 losing trades, and only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 winning trades. But if you take a look at the size of the winning trades, in some cases, for example, like this trade here, this would have made you an insane amount of money. This probably would have made you over 500% on your options pretty easily. And you can see this one here the same, this one here the same. So the reason why I even include these particular signals is because sometimes you can get a greater R to R on those. Now, now I want to talk about the risk and how do you control the risk. So I highly recommend you never risk more than 1.5% on any trade. So, but there are situations where I will go as high as 2 or 3%, but I do not recommend you do that because that takes a tremendous amount of skill, knowledge, and understanding of the markets that go far beyond it. But if you stay to 1.5% maximum, you're never going to get hurt. So what do you mean by that, Steve? So let's say that on this particular day, this signal, now by the way, these signals are generated sometime around 3:45 to closer to the close than they are to the open. They're on the close pretty much. So initially, there's 2 ways you can take the trade. Well, you can take the trade on the close. So this example right here, you could have taken a trade here. Now, what do I mean by 1.5%? Well, what I would do is, let's say you want to trade the options on that. Well, you would head over to the options market on that. And let's just say, by the way, there's a 1 to 9 day trade, so you got to go out to the closest one just above 9 days. Don't do 5, do 12 because that's closest to 9. So go to that expiry, and you could see here that if I were to get a signal right now, the at the monies would be $4.50. Well, 1% you would need a $40,000 account or a $50,000 account just to do one of those options, right? So that might not be feasible to everybody, right? The other thing you could do, but I don't recommend, is you go out to a cheaper option, but make sure they're really, really liquid, and maybe do a cheaper option that you can afford. So for those of you that don't have a large enough account, to buy a $50,000 account to buy one option, what else can you do? Well, here's what you can do. There's nothing that stops you from shorting the actual market. So how would I do that? Let's say I only have a $10,000 account and I want to risk 1%. Let's say this signal was generated on this day. And what I would do is I'd use the previous high of the signal, the closest previous high. So what I'm saying in this, within 3 or 4 candles. So in this particular case, the signal was generated here. You could have got in at 208 and put a stop $6.43 away. So what I would do is say, well, let's say I only want to risk $150 on this trade, Steve, right? Divided by, what was that again? What was that again? Divided by 643. Divided by 6.43. You could do 23 shares, right? And you could do 23 shares, put a stop there, and that would mean a hard stop. That would mean that you would not lose more than $150. You say, Steve, it's only 23 shares. Yeah, but so what? Okay, this trade gave an exit signal on this candle right here. So that is $29 times $29. You would have risked $150 there and made $686, right? So don't be afraid to trade very small size, guys. I mean, nothing's stopping you from trading one share, right? I've done it before. I mean, sometimes just for fun. I did it just recently with Google, and their was it Google? No, it was something else. It wasn't Google. There's another big name. I just did it. Facebook, on their earnings, the last earnings release that came out. Amazon. That was it. So Amazon reported earnings, and I actually shorted like 25 shares on these earnings right here. And it was a great little trade, right? 25 shares made me a shitload of money. You wouldn't think it would, but it did. So don't be afraid of high-priced stocks, right? So what I'll be doing is I will be giving you all the signals so that you can take a look at it. Now they're not all here. I haven't loaded them on all stocks, but for the most part they're on most of them. There we go. So I'll give you the entire price picture. So you'll be able to look at Google. You'll be able to see how it did in the last 2 years. Then you'll be able to make a judgment. Okay. So that's going to be free in my StockTwits room for the next, probably to Christmas. I think I'll probably do it to Christmas. Haven't decided yet. And then take advantage of it, because then I'm going to start charging for this room. It won't be a lot, maybe $50 to $99 a month, but you'll be able to go back and look at all the different trades, decide which ones you would have liked, which ones you won't like. I will put the ones I take, but I'm going to post all the signals that the algo creates. Okay? And if you want to learn how to do this, head on over to my website and, learn from me. For any of my previous students, just understand this is a system that I developed. This isn't my students. Make anywhere between 75 and 80% accuracy with their trades, but I can't teach you exactly what I teach my students. That wouldn't be fair, because they've paid me a lot of money. So this is a system that is really good. It works. It uses all the fundamentals of everything that I teach, but it also makes it so that it doesn't give away what I am doing and how I am doing it, but it will give you a very good idea. Like, my students would only have taken this trade here, this trade here, this trade here, this trade here, and really they would have been put a lot, one, two, three, four, five, maybe this one up here, six, maybe this one here, seven. My students would have only maybe taken seven of these trades, but the seven that they took would have worked out a lot more successfully than the other ones here. So this applies everything. It doesn't filter out for the absolute best trades, is what I'm trying to say. But it's still very robust, as you can see. Look at all these winning trades and how few losing trades. Okay, so I'm going to give you the entire history of the algo over the last 2 years, and then I'll show you when it gives a signal, and then you can decide for yourself. Again, I am not an investment advisor. Trading is extremely risky. I can and do have long periods of drawdowns, so keep that in mind. Past performance is not an indicator of future performance. Okay? But however, if you keep your risk to never more than 1.5%, you're going to do great. If you don't listen to me and you risk 2 or 3 or 4 or 5% on a trade, you're going to get your asses handed to you, because I have losing streaks, guys. Check my blog. I'm the first educator that will tell you. Go back and read all of my posts. I had from January to February to March was nothing but a straight losing streak for me. It was crazy. Now, it wasn't using this particular algo, but it was using the fundamentals that are developed inside this algo that are the backbone or the structure of this algo, if you will. Okay, hope you guys enjoyed that. Send me some love. Say hello. You guys don't talk very much. I don't even know if there's anybody here. For all I know, this could be a bunch of bots that stocktwits put on here. For all I know, like 5 people say hello to me. Talk to me. I'm a friendly guy. Unless you piss me off, then I turn into your worst nightmare and I'll haunt you in your sleep. It's a true story. Don't mess with me. Love you all. Bye for now.